In the last couple of years, we have seen major disruption in the banking space in India. After the fiasco of PMC Bank and Yesbank, there is another bank in limelight. It is Lakshmi Vilas Bank. The Union Ministry of Finance has placed Lakshmi Vilas Bank under moratorium till December 16 for 30 days, capping the withdrawal limit for depositors to 25,000 rupee. It means if you have deposited more than 25,000 rupee in Lakshmi Vilas Bank, then you are not allowed to withdraw more than 25,000 till December 16. While superseding the bank's board, RBI has announced a draft scheme for amalgamation of Lakshmi Vilas Bank with DBS Bank India. DBS is a Singapore-based multinational bank. After the news of moratorium on Lakshmi Vilas Bank, the share price of the bank has fallen from the level of 15.5 to rupees 8 in just 15 days. That's a fall of almost 50%. In fact, the share price of Lakshmi Vilas Bank has been falling for a long time. In the last 5 years, the share price of Lakshmi Vilas Bank has fallen from the high of 189 rupees to current level of 8. That's a fall of almost 95% in last 5 years. So Lakshmi Vilas Bank has been a big wealth destroyer. So in this video, we will try to analyze what went wrong with Lakshmi Vilas Bank. Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, we are doing a case study on Lakshmi Vilas Bank to understand what went wrong with the bank. Established in 1926 in Tamil Nadu's Karur, Lakshmi Vilas Bank obtained its banking license from RBI on June 19, 1958. The bank became a scheduled commercial bank on August 11, 1958. So Lakshmi Vilas Bank is a 94-year-old bank. It has a network of 563 branches and deposit of rupees 20,973 crore. But the bank has undergone a steady decline with continuous losses over the last 3 years, eroding the bank's net worth. RBI said that the bank has failed to raise adequate capital to address issues around its negative net worth and is also witnessing continuous withdrawal of deposits and low levels of liquidity. Hence, due to mounting non-performing assets, that is NPA, declining advances and lack of viable strategic plan, RBI has placed Lakshmi Vilas Bank under moratorium. Now let's try to figure out how it all started. During the period of October 2007 and January 2010, Lakshmi Vilas Bank was under the leadership of V.S. Reddy, who was the MD and CEO of the bank at that time. That was the period of high growth in India. The big theme during those days were infrastructure, construction, real estate and metal. Lakshmi Vilas Bank also took the bet on these sectors to grow its loan book. The corporate lending is always the easiest option because you can always grow your loan book as compared to retail lending where there is intense competition and very low margin. But at that time, bank did not realize that the higher exposure in corporate lending can also result in high risk when the economy slows down and there is mounting NPA. However, bank did not bother about NPA because at that time the NPAs were very low. So between March 2007 and March 2010, bank kept on growing its loan book. The loan book of bank has grown from 3,612 crore to 6,277 crore. During this period, the world witnessed a major economic recession in 2008. Although initially the Indian markets were unaffected, however later on when the foreign investors pulled back the money and the stock market tanked, the effect was visible. But the loan book of Lakshmi Vilas Bank kept on swelling. Between March 2010 to March 2013, the loan book grown from 6,277 crore to 11,702 crore. The biggest exposure of bank was in infrastructure sector. Although bank also had exposure in pharma, NBFC, cement, textile, engineering, food and beverage, etc. During this entire period, the CEOs of Lakshmi Vilas Bank kept switching. In fact, the bank saw 5 CEOs coming and going in every 2 to 3 years. However, bank continued its journey of loan growth and the loan book increased from rupees 16,352 crore in March 2015 to rupees 25,768 crore in March 2018. While the CEO did try to increase the retail loan book and MSME loan book, it was too late for bank to diversify in a big way. During that time, we witnessed the demonetization of high currency note and GST implementation, and that broke the backbone of bank because of its high exposure in the corporate loans. With that, the bad loan of the bank kept increasing, although the bank became a bit cautious in terms of dispersing the loan. So the March 2019 financial year saw the shrink in the loan book, and the loan book shrank to 20,103 crore. That was a dangerous situation, because on one side the loan book was decreasing and on the other side the bad loans were increasing. The bad loans were coming from infra, steel, pharma and packaging industry. So the biggest culprit in increase in bad loan for the bank was its strategy to increase its loan book by focusing more on corporate loans rather than focusing on retail loans. This was the exact same problem with Yesbank as well. They also focused their growth by giving loans to big corporate houses. And when those big corporate houses defaulted, the bad loan increased. While this strategy of focusing on big corporate houses sounds great because these corporate houses take huge loans as compared to a small retail customer. But this strategy backfires when the big corporate houses fail to pay the interest with the principal amount. For example, Lakshmi Vilas Bank gave a loan of 720 crore to Malvinder Singh and Shivinder Singh, the former promoters of Ranbaxy and Fortis Healthcare. And this turned out to be a bad loan. In September 2019, RBI put Lakshmi Vilas Bank under PCA, that is Prompt Corrective Action. In this, bank was not allowed to issue any fresh loan or open any new branch. This PCA is still not been revoked. There were attempts to merge Lakshmi Vilas Bank with Indiabulls Housing Finance, but that deal did not materialize. Now, there is some hope with this new merger plan with DBS Bank. However, the bad loan story of Lakshmi Vilas Bank is not yet over, and the bad loan stood at 25%, and this has increased quarter on quarter. With the COVID pandemic, it is expected that the bad loan of the bank would increase. However, the depositors of the bank are protected under deposit protection scheme up to 5 lakh rupee. It means those who have kept money under 5 lakh rupee are safe. But those depositors who have kept money more than 5 lakh in Lakshmi Vilas Bank could lose their money if the bank fails. For now, the depositors can only hope that this deal with DBS Bank work out, otherwise it would be a big blow to the depositors and the entire Indian banking system. So in this video, we investigated the reason behind the downfall of Lakshmi Vilas Bank. If you like this video, do share it with your friends and family. And also ensure that you keep your money with large banks with good performance.